JB Cycles with the weekend video on May the 24th. So we are starting to break down in the S&P, and we have a 4-week cycle low coming up late this coming week. So I am expecting more downside, and I'm getting now some signals for a continued downside into mid-June or late June. So, but first I would like to zoom out a little bit and show you my 28-year cycle going back over 200 years. So currently the cycle is bearish for the next 10 years. This is an alternating financial crisis cycle and a war cycle, and the current cycle is a war cycle. So the war cycle favors more conflicts the next 7 to 10 years or so. So we could be into more trouble than we already have got in the Middle East and Ukraine. Also here I have the analog from the 28-year cycle in the 1970s, which is roughly going down into the middle of next year, 2026, which could be an analog for the situation we are in today. Also here you can notice a 3.5-year cycle. I'll come back to that one. Also I could mention that the war cycle also shows a pattern in the 3.5-year cycle, and we are currently in a high-risk war period now this summer in May, June, July and August. And this is, the period where the Ukraine war started 3.5 years ago. So we have to be worried about that this summer. Also we have the 3.5-year cycle going back also over 200 years. So currently you see the cycle is topping. We are in the topping zone, and as you see here, the cycle still has a couple of weeks before it really gets bearish, and we are above here the 40-week average, which corresponds to the 200-day moving average. So that made me a bit confused, this big rally. Well, I should also say I didn't expect this correction to go this deep, and if we had stayed down here and seen some more capitulation, it would have looked like a bottom formation and a crash similar to 1998 and 2011, and that would have been bullish, and that does not fit into my expectations here. So actually to make this bearish, we quickly had to rally up and make this a bigger topping formation. But still, it made me a bit confused when the rally got this strong, and I still see a possibility of such an extension of the bull market into early fall, an ABC move, but this usually only happens in the bullish part of the 28-year cycle, and we are now transitioning into the bearish part. So I do not expect this bullish scenario. It is still possible, but the minimum bearish trend, we should at least get down to the 3.5-year average with a low sometime this fall. So this would be the best case, the soft landing, an ABC formation, but I am still my primary scenario is still something much worse, where we could end up around the previous bear market low around next summer. But all these three scenarios are still in play. They are all possible. So I have my wavelets here for the S&P daily data, and you see my purple wavelet has now turned down. It is signaling we should have a couple of weeks of pullback, correction or consolidation. And my primitive tool here is this rectangle. It tells me to I should not be long. I should either be cash or I should be short, because we have a lower top, so we are in the downtrend. We have lower lows, lower tops. So yeah, this is definitely a downtrend. But we need some more bearish confirmations here to really know that this was a top, because still we could go right back up and continue this trend. This could be a false signal. But so far, this the signal I'm getting here is stay in cash or be short for the next couple of weeks. And actually, I have kind of a couple of projections here, saying in best case we could make a low in about, I don't know, 2 or 3 weeks. It could drag out even a little bit more, making a kind of a bottom formation here, or the more bearish scenario here in red. So I will be following these the coming days and weeks, but here, if you look at the 2-week oscillation, I cannot see a 2-week oscillation low here, and that was my suspicion, that we have 2 oscillations merging into one, or rather it's only the 4-week cycle. There's no 2-week oscillation to be found here. So the next is this low that should be coming up late this coming week, and the cycle is bearish, so we should see more downside. But then we should get a decent bounce from this bullish part of the cycle, and this is my scenario, would be something like this: more downside, then a decent bounce, and then we should continue the downtrend. And I have put up some dates here for this and this 2-week oscillation lows, so around June the 13th or June the 26th. And I think actually it's the later one, June the 26th maybe. It's my primary one. So yeah, something like this would be my scenario. And the question is, how deep will this go? So I have some analogs to look at. So this is the big double top scenario. This is the analog from 2007. Here we actually made an all-time high, and then we dropped down, starting to make this heads and shoulder formation. So it is possible we could go all the way down and test the lows, like in 2007. The really tricky one would be this from 2015, where we cannot break down and we cannot break out to the upside, and we go sideways for a couple of weeks and then roll over. Oh, that would be a nightmare. And of course, because I'm a bit bearish biased here, I would really like to see a repetition of 2022, where we just crash down to lower lows. But my gut feeling tells me this low here in April was too low. I don't think we can create this panic again. So I think we are setting up for some kind of a higher low here, and then we start a new 10-week oscillation, but it can't really, it can't break out bullish. It could go all the way to make kind of a double top here, a double shoulder, but it should, it should stop somewhere here, and then we get this big kind of triangle or bear flag formation, or what you will call it, and then we get the breakdown later this summer. So down to late June, then bouncing in July, and then crashing down in August, perhaps August, September, October. Yeah, here it could get bad down here. So yeah, the VIX is also giving me a bearish signal. Yeah, it's following my bearish scenario here, and yeah, so the VIX, yeah, it has turned down. So just like the wavelet in S&P, it has turned down, and the signal is for more downside into mid or late June. See you in my next video.